Hello traders. First, let me start by saying happy Memorial Day weekend to everyone. Now, for those of you that have followed me for a while, know that I talk a lot about using probabilities a lot in my trading, and you've also heard me interchange decision area with support and resistance. In trading, nothing is known 100% going to happen a certain way. This is where we cross the intersection of decision area and probabilities. There are key inflection points where certain technical things happen where we see a decision has to be made, whether we continue higher, reverse, or chop sideways until order flow can tilt the scale one of those directions. So we have had the short covering bounce that I have been waiting on. Bear market rallies can have the most explosive price action. Is it over? I can't say that it is over, but I do see us coming to a decision area. On the SPY, the 417 to the 421 area looms large as one of those decision areas. We just had a 2 sigma move on the SPY, meaning we just moved 2 times the market maker's expected move on the week. And this was a great example of dynamic hedging that I spoke about a couple weeks ago, but this time just to the upside. There could be enough fumes in the tank left to carry us up to the 426 to the 430 area, but it may be more likely that we consolidate sideways to build energy for that next move. However, that consolidation could range between 426 all the way down to 406. Keep in mind that we have a 4-day trading week, and there we have the first of the month, which means new fund flows from the 1st to the 3rd. This also gives additional wind in the sails to either push us to that 426, 430 area, or just be enough to hold us in place. Things to watch this week. Keep an eye on the leaders in the Dow, such as United Healthcare, Goldman Sachs, Home Depot, for signs of a rollover. And with all of that being said, give me a moment to pull up the key levels to watch. All right, here we are back with the key levels for Tuesday, the first trading day of the week. Starting on the resistance side, we have our jack resistance at 417 to 418 area. Then we have our queen resistance at 419 to the 421 area. And then king resistance at 422 to the 427 area. On the support side, we have our jack support at 415 to the 414 area, queen support at 413 to the 410 area, and then king support at the 408 to the 404 area. The main thesis for Tuesday is going to be bearish, closing below the 415.26 area with a projected target low of between 410 and 406. The alternate thesis is bullish, closing above the 415.26 with a projected target or high of between 418 and 427. Because internals have been pinned to the highs the last 2 days, I expect a little regression on Tuesday, even if it's just consolidation. The current channel we're in is 397 to 416, and the next major channel above us is 416 up to 425. The minor channel is 414 to 425. That brings us to the scenarios of the day. All right, here we go with the first scenario. It happens to be our expanded range day structure. We can look to set a decision area, high boundary around the jack or queen resistance area before starting to fade for a portion of the day. Once we fade and reach the lows of the day, we should get somewhat of a rally or pop back at least to the middle of the range. So that's our expanded range day structure. And remember, the difference between the expanded range day structure and regular range day is that whatever boundaries we set, whether it's the high boundary or low boundary, we tend to push those boundaries further and further. So again, that's the expanded range day structure. And let me bring up the next scenario. All right, the next scenario is our rounded reversal day type structure. We could get a continued push lower toward the queen or king support area and find midday chop around either that queen or king support before spending the same energy we use coming down to go back up the second half of the day. On this rounded reversal day type structure, we have to be aware of a vice versa scenario, meaning we could come in a lot lower than what we currently are, and we would get the opposite scenario where we would continue up towards either the queen or king resistance area, finding our midday chop around there, and then using the same energy that we use going up to come back down. That is the vice versa scenario for our rounded reversal day type structure. All right, the last scenario is our trend day down, meaning we open gap down, start with a pop back toward the previous close. We find resistance on or before that previous close, then begin the downtrend for the morning. We find midday chop around either that possible queen or king support area. And tomorrow I will be looking more of a pop or rally back into the close if we do get a trend day down. Also, on the trend day scenario, we have to be aware of a vice versa scenario, mainly because I'm doing this so early, not having a chance to see the inflection of how the overnight market flows. So we could continue up, and this could turn into a trend day up scenario. And if it is the trend day up scenario, the blue line represents the previous close. We would open gap up and we would fade back toward that previous close and find support on or before that previous close, then begin the rally of the morning or that main trend up for the morning. Lunchtime, we find our midday chop, and we would get our head fake, and then probably a fade into the close. So that's the last scenario. There's going to be a lot of things to kind of look for this week. Again, I want to remind you that I will be taking a closer look to the leaders in the Dow, mainly United Healthcare, Goldman Sachs. I think Goldman Sachs I've already started a short in, and Home Depot. So those are things to keep in mind. Again, the internals have been pinned up for the last 2 days. So we have to be careful of consolidation that could happen. And one other thing, while I have it up here, I started by showing some of the channels that I've been keeping track of. And coming into the Monday, that 425 to 428 area, 428.27 area, it's going to be very important to keep an eye on as the week unfolds. Let me see if I can bring it up here. Now that the drawing's off, let me see if I can bring up the vol map that kind of tracks the channels that I'm watching. Bring it in a little bit because it's kind of hard. This is actually the Andrews pitchforking, which I use to kind of keep track of channels or trend channels. And this is the actual middle portion of the channel, and this is the high portion of the channel. And if you notice, we come into that kind of 428 area. That's going to be real key to keep an eye on this week, breaking the top side of that channel or coming back to the middle of that channel. So I just wanted to show you that. As always, it is very important to understand and know your risk, what you have on the line at any given time. And wishing you a positive trading day. Hope this helps. Have a great one.